Calculating the cost of a non-current asset. In this video, we will cover how to calculate the cost of the following: buying a non-current asset, buying land, buying a building, self-constructing an asset, buying asset in a lump sum purchase. We will start by buying a non-current asset. Let us assume that a company is buying a machine. The machine price is $1 million. The company paid $60,000 to ship the machine. The company paid $30,000 to install the machine. The company also incurred $10,000 in training labor. The cost of the machine is calculated by adding the price of $1 million, the shipping cost of $60,000, the installation cost of $30,000, and training of labor for $10,000. So the total cost will be equal to $1,100,000. In summary, the cost of the asset includes all the costs incurred to make this asset ready for its intended use. There are other expenses that the company would pay for the asset, but they are not included in its cost, such as the company insured the asset against fire for $12,000. Paid for the asset maintenance $500. Paid any recurring expenses related to the asset. All these are expenses, and they are expensed in the period in which they are incurred. They are not regarded as part of the asset's cost. Now let's see how to calculate the cost of land. Assume that the company purchased a lot of land for $200,000. The land had some wooden sheds on it. The company is intending to construct a building on that land. To buy this land, the company hired a broker. The broker received $20,000 brokerage fees. It also paid $10,000 for legal fees and registration. The company had to demolish the sheds to start preparing the land for constructing the building. The cost of demolishing the huts is $20,000. The company paid $10,000 for grading the land to prepare it for the construction of the building. The cost of the land includes all the costs that the company paid to make the land ready for its intended use, which is constructing a building in this case. Accordingly, such costs include the cost of the land, the brokerage fees, legal fees, demolishing of sheds, and grading costs. So the cost of the land will be equal to $260,000. Cost of constructing a building. To construct the building, the company had to issue a building permit of $10,000. It hired an architect to design the building. The design cost $30,000. The company hired a contractor who builds the building for $800,000. The cost of the building will include the permit, the design, and the amount paid to the contractor. The total cost of the building will be $840,000. Cost of self-constructed assets. Now let us assume that the company decided to construct the building by itself, as it is a construction company. It will still issue the building permit for $10,000. It paid the architect $30,000 for the design. It bought material for $350,000 and $250,000 for labor. Additional other costs incurred for constructing the building for $50,000. The company borrowed money from the bank to finance the construction of the building. The interest that incurred until the building is ready for use is $20,000. To summarize, the cost of the building includes all the costs that were paid to construct the building until it is ready to be used. Accordingly, the cost of the building in this case will be equal to $710,000. Let's now see the case of purchasing assets in a lump sum purchase. Assume that a company bought a golf club which includes land, clubhouse, golf carts, and golf equipment for $2 million. The company needs to assign a cost for each asset. Like the land, for example, is not depreciated at all. The golf carts are depreciated differently than the clubhouse, etc. The company hired an appraiser who appraised the assets as follows: land for $945,000, the clubhouse for $900,000, golf carts for $315,000, and golf equipment for $90,000. The total appraised cost is $2,250,000, but the company paid only $2 million because it bought all the assets as a lump sum purchase. How are we going to deal with that difference? To deal with that, we are going to get the relative amount of each asset as follows. For example, to get the relative amount of the land, you would divide its appraised value, which is $945,000, by the total appraised cost for the total asset, which is $2,250,000, to be equal to 42%. The same thing applies to the other assets as follows. For the building, it is 40%. For the golf cart, it is 14%. And for the golf equipment, it is 4%. They should be equal to 100% at the end. Then, we are going to multiply each percent by the amount that the company paid to allocate the cost of each asset as follows. For example, for the land, we will multiply 42% by 2 million, so the land cost will be equal to $840,000. The same thing applies to the building, where its cost will be equal to $800,000, and the golf cart, where the cost will be equal to $280,000, and the golf equipment, where the cost is equal to $80,000. The total cost must be equal to $2 million. The following journal entry is recorded to record the purchase of assets. Debit each asset individually, then credit cash by the amount paid, which is $2 million.